Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q1 FY27 post earnings conference call of Jyoti Resins Adhesives Ltd. Today on the call from the management we have with us Mr. Utkarsh Patel, Managing Director, and Mr. Samit Shah, Chief Operating Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to give us their opening remarks, briefing us about the business and performance highlights for the period ended June 2026, their growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Ladies and gentlemen, I welcome you all to this con call for Q1 FY27. At the outset, Q1 started off on a very tough note in terms of global uncertainties and unrest in West Asia, which led to the sharp spikes in crude prices and freight rates, subsequently impacting our key raw material price, which also appreciated sharply. Since we are light on inventory of raw materials as well as finished goods, we had to take the impact of the sharp rise in the raw materials price. The price increases happened gradually in May and June, and this will help normalize margins at 23 to 25% levels in Q2. Revenue growth stood at 17%, of which nearly 10% was contributed by volumes, while the balance was led by price increases. Despite a dynamic operating environment and volatility in key raw material prices, the company has continued to demonstrate resilience, disciplined execution, and a clear growth orientation. Our performance in the quarter reflects the strength of our Euro brand, our deep distributions reach, and the trust we enjoy among carpenters and channel partners across India. During the quarter, we continued to strengthen our market position in the wood adhesive segment. Our business model remains anchored on three core pillars: brand lead demand creation, strong carpenter engagement, efficient manufacturing, and distribution execution. One of the most important developments for our future growth is the ongoing capacity expansion program. We are progressing towards increasing our manufacturing capacity from 2,000 ton per month to 3,500 ton per month, which we believe will support the next phase of volume growth and market share expansion. This expansion is being undertaken with a long-term perspective and is aligned with our broader aspiration of building a significantly larger adhesives franchise over the coming years. This is also in line with our foray into UP and now entry into Jharkhand markets. We are also opening one more state in Q2, details of which we will share into the next quarter. We are also encouraged by the continued expansion of our carpenter network and our increasing penetration in the both existing and new markets. The response to the Euro brand remains encouraging, and we believe that sustained investment in brand building, distribution, and customer relationships will continue to strengthen our competitive position. Our registered carpenter base has increased to 2 lakh 10,000 carpenters. Importantly, we continue to maintain a strong balance sheet with zero debt, healthy cash generation, and robust return ratios. This financial strength provides us the flexibility to invest in growth while maintaining prudent capital allocation and shareholder focus. As we look ahead, our priorities remain unchanged: drive volume growth, expand market reach, improve operating efficiencies, maintain healthy margins, create long term value for all stakeholders. We remain confident about the structural growth opportunity in the Indian wood adhesives market, supported by housing demand, furniture manufacturing, interior renovations, and increasing formalization of the industry. With that, I would now be open to take questions and answers.
Thank you, sir, for your opening remarks. All those who wish to ask a question may use the option of raise hand. In case you are unable to raise your hand, just drop your question in the Q&A box and we will ask on your behalf. Sir, we'll take the first question from Ritika Shet. Ritika, you can go ahead.
Um, Hello. Congratulations for a decent set of top line. But there have been consistent concerns regarding the progress of our planned vision. So, considering your investor presentation, slide number 15, which states the capacity expansion tons per month by FY 29, we plan to execute the capacity expansion from 2000 tons in totality to 3500 tons, right? In overall. So in that, the capacity utilization we anticipate is 60 to 70%, considering. So what is the total revenue figure you have planned before we go ahead with the greenfield expansion? That is first question. And what are the margins which you anticipate by FY29? So the reason why I am very skeptical in asking you this question is because uh, we had to plan the raw material and input cost inventory planning much beforehand, which we failed to do so for the quarter. So how do we plan to forecast to do that in the next 18 months, considering the worst case scenario that the geopolitical crisis continues and stability does not arise? So kindly please share some and throw some light on the same. Thank you.
That's a very good question. So, answer to your first question is, you are very right that about 10% almost growth we have taken from quarter one YoY. So now about the concern about the growth plan expansion. So as you know that about almost 60% now we are utilizing our capacity. So that was the vision we have created. That's why we are now moving to the 3,500 ton per month capacity, and it was mentioned into quarter 2 FY27. So almost 80% work has done, and within 1 or 2 months we will be ready with this capacity. So that can generate almost 600 to 650 crores of revenue from here. And for the next phase, what greenfield facility we are going to do. So that was for the longer term plan that for enable for the 1,000 crore of revenue vision. So that will be done by the partly, and it will be possible with the internal accruals. So 45 to 50 crore rupees initial capex, and mainly that 50% will be the land part, and 50% will be the constructions and remaining parts, machineries and everything. So we'll build the additional 1,500 ton per month capacity into that greenfield, and phase wise will add as per the requirement. So yes, we'll be ready for that. And regarding raw material procurement, yes, you are right that we are at 30 days of inventory right now as per our revenue generations. But now we have also improved into that part, and for the quarter two, we have done the contract for the 90 days with our raw material suppliers, importers. But because of that situation was very critical at the time, and we tried our best to make the contract for the 90 days. But as you know that the situation was very unstable into the March and April. So that was the sudden rise, and these geopolitical issues and war issues, we were not able to get the deal from the suppliers, and that affect our EBITDA for the quarter one. But now we are very much confident about that. For the 22 to 25% EBITDA margin we have guided, we'll be able to maintain that. So this is how our plan is.
Thank you, Utkarsh bhai. But just one question here, that so the revenue which you guided 600 to 650 crores, that will be for FY27 balance, meaning Q2, Q3, Q4, right?
No, we have guided that capex what we have done 3,500 ton per month. So that can generate 600 crore of revenue for the existing plant. What
Okay.
the brownfield we have.
From next financial year onwards, or from when?
Sorry.
Because that capacity will be on from next month, right?
Next month, right? So that can generate the 600 to 650 crores of revenue from existing plant. So our capex is done for the 650 crore rupees.
Okay, okay. And did we actually take stringent supplier contracts for raw material costs immediately, or I mean, how do you foresee the FY27 EBITDA margin? I mean, will we end on a 23 to 25% EBITDA margin level, or because of this one quarter being dampened, the overall EBITDA margins for FY27 will be dented? That is the question.
It, I think it will be effect of obviously quarter one EBITDA is now 16% around, so it will affect all over 4 quarters. But we'll try our best that how can we maintain above our 22 to 25% EBITDA guidance for the longer term. See, this is very exceptional situations and it was beyond the control. Because if you see the effect of this 10% EBITDA is because of the mainly 6 to 7% because of the raw material prices. So our gross block is affected because of these situations. Otherwise, remaining 3 to 4% we have invested, as an example, we have do sales promotion into quarter one very aggressively for the dealer segment. So we have done almost 54 dealer meets, 54 territories we covered into the quarter one, and that almost 2.5 crore rupees invested into that. So that is the 4.5 crore rupees invested into that. So that is the effect for that also.
Okay, perfect. And what are the EBITDA margins for the emerging states versus the core six states which we are already penetrated more than 30%? What are the margins fluctuated? Because we would be giving incentives, more incentives to the carpenters in the growing states, right? So, what will be the difference in margins?
Yeah, that is very to very. It is very micro what you are asking for the data, because now we are into the almost 100 cities and almost 65 territories we are operating. So it is micro to micro. But yes, of course, in a newer states, we have the attractive margins for the carpenters and for the dealers also to penetrate more and to make the network. So initially, 2 3 years is always the situations that we need to set our product and create the more pool about that. But all our guidance is we are very confident about the 20 to 25% of EBITDA, what we have also earlier mentioned, already maintained last 4 5 years.
Sure. Thank you.
Thank you.
All the best.
Thank you.
Thank you. Sir, we'll take the next question from Smith Gala. Smith, you can go ahead, please.
Yeah, thank you for the opportunity. So my first question will be, well, I understand the raw material prices were elevated and which took a major impact on our gross margins. I have noticed a sequential increase in the employee expenses as well, from 9 crores to 11 crores, or 25% odd increase. So what were the reasons, and will this expenses remain elevated in the coming period? Secondly, we have taken price increase from around mid-May onwards, and crude prices since then have cooled off a bit. Yes, still higher than the normalized levels, but the price increases have been also taken. So can we see one quarter of above normal margins of 23 to 25%, like 28, 29% margins for one quarter, quarter two? That is my first question.
Yeah. Yes, you are very right. Employee cost has increased because we have hired new talents also. And now we have increased our sales force from 520 to 562 people. So for the newer territories, also for the existing territory also. So we are driving our growth very aggressively, and we are covering both part sales and marketing and promotions and everything. As I mentioned that 54 dealer meets, actually it was in quarter one, but actually it was in only 45 days. So that was done between the 16th April to 30th May. So that was done by our entire team, and the aggressive efforts going on. So we want to cover and going more deeper to cover all the markets. So we are hiring new talents. We are hiring for the business administrations, business operations side also. So these all efforts are going on, and that is the reason that plus also the appraisals part also coming into the April. So that's why this employee cost is increased. But we are very much confident that we'll be in control of around 11 to 13% of around what are the mainly industry standard for the employee cost. So that is also a good part that we are in control regarding that. And yes, because of the raw material crisis, the EBITDA is impacted. And for now, it is a little bit cooling period for the raw material, but not at that original level that arrived yet. So it is too early to say that we can maintain the 28%, 29% EBITDA in quarter two or not. But our effort is mainly for the growth part, and the main thing is important is though we have increased it or taken the price rise into the April and May month. So that is also a good part that though we have increased the price, we able to maintain that 10% of volume growth. It means that our brand is acceptable, our relationship, our distribution network, whatever it is in a working in a good direction. So that can I assure that we are always thinking about the customer first. So it is too early to say that we can rather maintain the 28% EBITDA into quarter two. But as I said that about the longer term, we are confident about the 22 to 25% EBITDA margin.
Okay. So the next question, while I understand this employee expenses are a steady state run rate, but there are no chances of these being cooling down a bit from here. This is what I understand. Next, if you there was you covered that 4.5 crores were invested into dealer meets in the quarter one. So I understand we do generally do dealer meets, but they were elevated in the quarter one. So, what are the generalized expenses in the dealer meets we carry on in in a normal quarter?
See, last year actually we have done almost 30 dealer meets, and the expense was almost investment was almost 2 crores around. And this time it is additionally 2.5 crores we add. So this is how we do, but it depends upon vary to vary upon the market situations and everything. But as we are now focusing on more into our channel partners for the dealers, for the carpenters. So all efforts are going together.
Okay, and final question from my side. We were targeting around 20% of the revenue growth. Out of Can you split between what quantum of that will come from volume and what will come from price? Because this guidance was after Q4, considering the geopolitical situation, because not considering the price hike. So can we expect a better revenue growth considering the price hike now?
Yeah, see, we always believe for the volume growth, we need to more focus for the volume growth only. And it is too early to say because as the situation was very unstable, and that's why this price rise has taken for the market leaders also and for us also. But maybe the situation come back to normal after quarter two. We don't know exactly right now the situations about that, and we it's depend upon the market situation. Maybe we need to take a call to reduce the realization value also, but it is too early to say that. But right now, if we can see that 70% of growth is from the revenue, so 10% is from the volume, so 7% is from the price rise. So maybe it can continue for the quarter two also. After that, it depends upon the market situations actually. But yeah, we can say that we aim for always more than 15-20% of volume growth. And I hope this quarter one, because of due to these situations also, we were able to do this growth. So it's a very positive sign for the coming quarters.
Okay, thank you. That was all from my side.
Thank you.
Thank you, Smith. We'll take the next question from Pawan Kumar. Pawan, you can go ahead.
Sir, can you just put out the carpenter points number and also for the year, what are our advertising expenses and sales and commission expenses expected to be separately?
So that is already mentioned separately. So sales promotion expense is already mentioned separately. And
No, for the year, I said FY27, what do we expect?
for the sales promotion expense, you are saying that?
Yes, yes.
It is almost last year it was around 45 to 50 crore rupees around. So
Uh-huh.
maybe it can be depends upon the what volume we can create,
Uh-huh.
and that can be considered as a 10% plus for this year.
So you are saying 45 to 50 crores means 10% additional on that, correct?
Yeah, yeah, that is sales promotion expense means it covers the loyalty program, the redemptions, the carpenters. That is cover into that program. And for advertising and branding, we have targeted for the 6 to 7% of the revenue.
Uh-huh.
That covers trade marketing, the carpenter meets, dealer meets, the branding,
Okay.
the mass communication. That is covered into that.
So that is 6 to 7% of the revenue, correct?
Right, right. We aim for that. So right now,
Uh-huh.
currently, we reach to the 4% around,
Uh-huh.
and after this quarter two, see quarter 3 and quarter 4 is the month where the market is very much open to maintain these activities regarding carpenters and dealers and everything. So that is always the month that we can put more efforts into this brand communications and trade marketing also. But all over, if we consider for the yearly wise, then yes, we are targeting for the 6 to 7% for the from the revenue.
Okay. And now, what about the carpenter points, sir, for this particular quarter?
See, I always mention that it is upon depends upon the market to market because in newer territory we are passing almost 20 to 13% to the carpenter points, and for the older and mature market we are passing almost 7 to 8%. So it is between the to 7 to 13%. So averagely it is maintained 11 to 12% around, and for the dealer it is also the same like this ratio.
Okay. And what about like this carpenter sales that you add in the revenues? Like what percentage would be that be for this quarter?
Carpenter.
The sale, like you had some amount of sales in the top line, right? For the carpenter,
Okay, you are asking about the difference between the redemptions and the ratio. So
yeah.
it is around 4 crore rupees.
Oh, okay.
Okay. Thank you. Thank you.
Thank you.
That's for
Thank
from.
you, Pawan. Sir, we'll take the next question from Saket Saraugi. Saket, you can go ahead.
Like what was the prices of the key raw material in March and what is it now after like till when it till what point it had gone and till like now what is the price?
So, see, for this white glue adhesives, the key raw material is VAM, vinyl acetate monomer. So, it is averagely 75 to 78 rupees around per kg. And that in March, last 10 days, it went up to the 170, 180 rupees. And it was also remaining to April month also. So after that, that set back to 150, 135. So it is very volatile every week, every 2 3 days. That was a commodity product, but right now it is set to almost 100 rupees per kg.
So from March till now the price hike we have taken. So what percentage would be the price hike we have taken?
So it was half price almost we have taken because it was taken into the mid of May month. So almost 4% was taken into the April and 11% was taken into the May. But we can consider that was taken from the mid of the quarter. So almost I think 7% of price rise we have taken right now
Like from March till now
for the
taken
quarter
7%.
for the quarter 1. I'm saying.
Okay, so for in quarter 2 we haven't taken any increase for
No,
the
no,
prices.
quarter 2 we have not taken any increase. It was remain same as we have increased into the mid May month. So right now it is continues.
So sir, have we seen any adverse impact because of this price increase in the sales after May maybe?
Actually, it was impacted on that particular days where the situation was not normal, and yes, of course, customer were waiting for the price decrease. Also, they have put some projects onto the hold, and I believe that was the scenario all over across the India regarding the building constructions. But after June month, we got the traction, and July we are seeing that it's a good month versus demand wise, and maybe the project was very much on onto the hold within this 1 month. So that was the demand was created again, and right now I think situation is normal. So people has accepted that. So that is a good part. What I'm trying to explain that. Uh, when your brand is acceptable, when your all over operations are acceptable, then that is the only situation where a customer accept the new price or this incredible price hikes. So that was expected, and we got that 10% volume growth. So that was a very good sign for us.
Well, the volume growth we have got in this quarter, was it like that everybody knew that the crude prices have shot up, so maybe the price of the product will increase in future, so people have bought in advance before the price, like the price hike we took. So was it that the growth was front ended and like later part where the growth was lower?
No, it was you are very right, but it was into the March month actually. Because when I think 15th March, the situation was unstable and the price almost goes up. So yes, of course, last 15 days, March month, people has bought that inventory and procured their margins. But in April and May month, if I'm telling about after 15th of May, the price has already increased. So after that, it is not the situation where they can take this call. It is already increased. But though what I explained that July month was that where the all the sites are going very well and the demands are coming back to the routine. So this is, I think, the situations happens to the each all companies right now.
So you told in the current quarter we have taken like 54 dealer meets, like, and last year it was 30. So for this year, taking almost doubling this dealer meets, what has driven us to do like this? Because we haven't added many major new states. We are already in the current states where we are. So why doubling this dealer meets? What helped? What will it will help us in?
Yeah, so it was the network and it was the drive we have taken, and what network or what investment we have done into our team, the channel partners. So this time we decided that we'll go aggressively, and as I mentioned that we have made the budget for the 6 to 7%. So we decided to go aggressively and to connect the more retailers, to make the strong relationship with them, to make the visibility of the brand. So all the territories, even smaller territories, we cover. So the last year in April May month, we have not that much of team or well established experienced people, and what investment we have done into the training and inductions and everything. So it's all put together. We can say it's a drive we have decided, and that we were able to cover that in a very short period.
Okay, so last question, like the 2000 ton capacity we have, what the capacity we saw on the presentation. So what would the utilization as of like last quarter?
This quarter 1, you are saying that?
Yeah, sir.
Yeah, so this quarter 1 is almost 70%, 65 to 70% of total.
Okay, so the next capacity which we are putting up will come live in this quarter. So our capacity will become 3500.
Yes.
So by when we expect to utilize this capacity 3500?
See, as I mentioned that capex, what we have done into the brown field, so that gives us the 3,500 tons, so it can generate the 650 crores of revenue with the existing plant. So we want to be very well prepared, because as this is the asset light model and we have not invested much. But see, in this B2B, B2C model, this 4 5 months are the months where the sales goes very much up. As an example, in March month, we have done 2,400 tons per month. So we need to be very well prepared about the averagely we are doing 1,300 tons per month. But still, we need to prepare about that. So that's why we have advance build our capacity to maintain these 4 5 months sales. So we cannot lose the sales into that particular months.
Okay.
So yeah, we can aim for 3 years growth plan is 500 crore top line we want to achieve. So we are aiming that at least within 3 to 4 years we can able to generate this revenue and we can fulfill our 100% capacity for the existing plant.
No, sir, I'm confused. You told that 3 4 years revenue target is 500 crores.
Yeah, right.
Like total, like as of now, we are 360 crore from current quarter run rate. So
314 crores. Okay. Current quarter you are saying. Okay.
it was almost 90 crores. So
Right.
like that, by that it will do 360 crore if that is taking the base. So if in 3 4 years we're targeting 500 crores, the growth is hardly sir 5 7%, 8%, 9% maximum, sir.
Right. So right now, see, I'm assuming about because this quarter is because of the revenue price has also increased also the realization value also. So I'm considering that maybe the realization value come back to the normal, and so about the volume growth if I consider, then we can count for the 3 years of 500 crores. So in an earlier conversations also an earlier call, we have guided for the next 3 years 500 crores. So if you consider about then it is a 15 to 20% of volume growth rate.
Okay, sir.
So now this is the additional benefit if the realization will be the same or we don't know the exact situations
So,
what will
so
happen for that.
I'll just add into what MD sir is saying. So we are getting future ready basically, and hence this investment, brownfield expansion, and all. So that's what we have been doing. We are in the transformation phase, and you might have seen since quarter 4, like we have been growing our volumes all across. We are coming up with the new territories, onboarding new talents all across. So there is a huge amount of development and groundwork is going on as we speak. Right, and hence, despite all odds or despite adverse conditions, also we have been able to garner decent amount of volume growth backed by price growth also, and overall that's why revenue growth is in the line of 18% quarter on quarter. I mean, over the last quarter, I mean Q1 last year versus this year. So this complete transformation journey is going on, and to be future ready, this investment has gone in all across, and it is going to reap huge benefits in the coming few quarters. Is what I can add in what MD sir has already said.
Okay, sir. Thank you so much.
Yeah.
Thank you, Saket. Sir, we'll take the next question from Videsh Asher. Videsh, you can go ahead, please.
So congratulations on a good set of numbers. So I would like to, so congratulations on having good volume growth. However, we are still we had aimed for about 15-20% of volume growth. So I would like to understand first of all, where did the volume growth come from our matured strong states or from the newer states, and if you could give the mix. And so how much are we expected to benefit from the price increase in the current quarter?
Yes, of course, the volume growth is the coming from the both together, I think, because the volume is more bigger into the existing five mature states, but that is also very huge gap and more opportunity lies into capture this volume also. As I mentioned that if we in Karnataka we are at 15% of market share, so still it is a very long journey to go to cover this volume. Plus, we are expanding the newer states, so we are focusing into the east side. Most where West Bengal is there, the Telangana is there, North India is there. So we are targeting both territories to grow together. So that will become from the both mature states also and newer states also.
Okay. So what has been the response from the newer states? Has it been as expected or below? Could you give us some light on that?
It is, I think, as expected. As I mentioned, that it is a B2C model and retail network is very time taken models that we need to penetrate and we need to set our network into the existing, the newer states where the existing brand is already there since last 10 years, 15 years, 20 years. So we are breaking that code and we are hiring talents, we are setting our network. So we were able to get the channel partners. We enter into the Jharkhand also. We enter into the North India, the deeper also. So these all are the parts that we expected about the placements of the products. We introduce ourselves. We said we adding the people. So I think that is in line what we are targeting. So it's a good response basically. In UP, it's a very good response for our product.
Okay. So good to hear that. So good luck.
Thank you.
Thank you, Videsh. Sir, we'll take the next question from Indresh Malik. Indresh, you can go ahead, please.
Yeah, thank you for the opportunity. Yeah, Utkarsh bhai, what was the trade receivables balance on 30th June? Hello,
150 crores.
150 crores. And
Exact
what should
exact
it
number
be?
I don't have right now, but I think it is 145 to 150 crores around.
And has it improved in the last 41 days in the Q2?
It is improved. See, that is the main focus area for us, and we are trying our best to set back to the normal, to the 120 days around. So that is our first goal, to achieve that. But as I mentioned, that we are as a directly to the retailers, not by the distributors. So right now it is going a little high for the newer states or newer developing area, what we are focusing on. So this is the reason, but we are setting up the good network and good training and inductions program for the where can we train our people to maintain these days and make not in the cost of them the spoiling any relationship with the dealers. So I think within 1 or 2 quarter we'll be in a very good condition to maintain these ratios for the data side.
Right. So most of the things have been asked. So I will ask you, in February, you said ki you will get a Big Four auditor and a buyback, both were considered. So what are the decisions now?
No, no, no. I have not said that we'll do that, but I have said that we'll look into this matter. And I think the Big Four is a little early for us to set that. And as our auditor is, as I mentioned, that they are the Ecovis company, the Germany, good top 5 auditors. So they are the partner into India. And they are also, Arcabra is also very good auditors as you can see the profile also. And remaining the buyback, see, always mention about that right now what the competitions are going to face, and plus what we are into the expansion stage. So company will require to deploy this fund into the market expansion, and it is better condition right now. So we have discussed internally for the buyback also, but the conclusion is not came yet right now. So we are morely to invest into the expansion into the market and company's growth. Right now, the conclusion
Right.
is
And what about the NSE listing?
NSA listing is in process. Within this quarter, I think we'll have the NSA listing.
Okay. Thank you, Utkarsh bhai. All the best.
Thank you.
Thank you, Indresh. We'll take the next question from Dishant Shah. Dishant, you can go ahead.
Hello, Utkarsh bhai. I hope you are doing well, and hello everyone. Thank you for this opportunity. Utkarsh bhai, I have a very macro question, and I think I have never read about this in any of the materials that I could find on the company. My question is that a lot of companies are, and even the government is promoting exports from India, right? And I myself am an exporter to Latin America and Africa of industrial products, right? And I have visited a few of these countries and see the hardware markets over there. I just wanted to ask that, do you have any plans in the next, let's say, 2 or 3 financial years to explore foreign markets, especially the emerging markets of Africa or South America? Thank you.
Yes, of course, it is a very good opportunity what you are coming from, and I understand what you are saying that. But right now, our target is to achieve at least 500 crore of top line, because see, we are investing into the existing territories, existing domestic market. We are building the team over here. We are recruiting new talents for the going more deeper. So it is still it's too far to think about the to enter the different markets. So we are more mostly focusing to that. Yes, we have added more into OEM segments. Now we are focusing on to the OEMs, the modular kitchens, modular furnitures market also. So right now we are generating the revenue of almost 6% from our total revenue for the OEMs market. बट आगे जाके ये मुझे लग रहा है कि 10 to 12% इसमें जाएगा हमारे रेवेन्यू से. वी आर बिल्डिंग द टीम इनटू द ओएम्स आल्सो. वी आर गोइंग मोर for the Bangalore, for the Telangana, for the Delhi, for the OEM market also. So we want to remain into this market for at least next 3 years for that. After that, maybe we have the team and everything is set over here. We can think about that, but not before 3 years.
All right. So basically, what I meant was that not as an OEM, but launching our brand as Euro, right? In these foreign markets. That was the that is where I was coming from actually.
Yeah, but as I mentioned, it's better that we all investments are we are doing over here. As an example, 54 dealer means we invested 4.5 crore rupees. So it is better to leverage them and capitalize that investment for right now from here, and to at least stable and maintain this 25% of EBITDA. And as our business is generating the cash, so anyhow, when the opportunity we look for that. So after 2 3 years, maybe we can think about that, but I don't think so it is a right now. It will be a too early step for us, and I think it the focus will be diversify also. So I don't want to do that for my team also. So it is better to focus into the domestic market. And the see opportunity is now ocean is that 8,000 crore of market is there. So at least 1,000 crore of target we need to go for a 20% of market share from the existing territory. We should right now.
All right, all right. Thank you so much.
Thank you.
Sir, we'll take the few questions from Q&A box. This question was asked by Arjun Shah. Sir, his first question is, what is the amount we hold currently approximately, which is unpaid to carpenters? Unpaid benefits.
That is around 90 crores.
Okay. And the second question is, how much has our carpenter network grown over the last 3 years?
So it was earlier almost 1,70,000 carpenters we have registered. If I talk about the last 3 years, maybe it was 1,50,000 below. But right now it is 2,10,000 carpenters we have registered into our loyalty program. So if within last quarter, I think we have increased 10,000 carpenters around.
Yeah. Sir, we'll take the next question from Ritika Sheth. Ritika, you can go ahead.
Uh, Thank you, management, for giving me an opportunity once again. So, I just had a confusion about the 500 crore top line target vision. So, is it by end of financial year 29 or financial year 30? 3 years means from this financial year or from next financial year? Thank you.
For the 29, we can consider for the 500 crore of revenue.
So, by end of financial year 29, 500 crore top line is the target, right?
Yes, kind of. We are aiming for that, and we are hoping for the best for that. And so if we consider about 15 to 20% of volume growth, that is achievable. So we can consider that.
Correct. So 500 crore top line with 23 to 25% EBITDA margins. That's the target by FY29.
Yes.
Perfect. Thank you so much, Utkarsh bhai. All the
Okay.
very best.
Thank you.
Sir, we'll take the next question from Saurabh Rathor. Saurabh, you can go ahead, please.
Hey, hi. Thank you very much for the opportunity. Good afternoon, Utkarsh bhai. I just wanted to understand a bit about the nature of receivables for the business. I see that both in FY25 and FY26, revenue went up by 30 crores and so did the receivables by a similar number. So just wanted to understand, what is the nature of receivables here?
Yeah. See what our moat is. As I explained that we are direct to retailers, and from last 10 years we have taken the decisions about not going the typical traditional distribution module. So we have created these 54 branches across these 15 states, and companies doing the stock transfer to these branches, and we are doing the billing to the direct retailers. So our datas are spread across these 13,000 retailers, what we are doing the business with them. So this 150 crore rupees are spread to the these 13,000 retailers. So as you can see that about the last 15 20 years, what business we have generated, we have not lost any money into the having these bad debts. It is below, always the below 0.5%. So we are into the journey that we are more focusing aggressively to making the strong push of our product to the retailers, making the strong relation with the newer markets, new retailers. So that is the what challenging we are facing right now. But yes, of course, when the products are very well accepted and when the demand can generate and we can maintain our good relations and good product demand into the market, then we were able to decrease this days ratios. In a newer market, it goes a little high, but in existing mature markets, we are able to maintain within 90 to 100 days. So we are aiming to do this. First, is we are aiming to at least maintain for the 120 to 130 days, which are right now above 150 days. So we are aiming to do that, and I hope within the 2 quarters we'll able to maintain this.
Got it. Got it. What is typically the number of days of inventory that is held at a retailer's store?
Uh, that is depends upon the what
Broadly.
market he was there, but yeah,
Maybe.
that is very very depends.
But broadly, like what would that number look like?
It's very to vary because there are the very different kind of volume. Few counters are very we can consider A plus counters, so they are, and it's also because not much inventory because right now we have the availability of the all states, all 100 territories. We have the depots available, so it is easily maintained daily. Twice we do the delivery most of the territories,
Got it.
and yeah, so it's not much bulk packing. They are not keeping much stock actually for the 50-60 kg. For the smaller SKUs, they are keeping the stocks actually.
But then your credit terms with the retailers would be very lax, right? If they are able to turn the inventory around so quickly and we are collecting after 120, 130 days aspirationally, then the credit terms are pretty good for the retailer, right? Is
Yeah,
that a
see,
fair assessment?
yeah, we can see that we can consider, of course, that little it is little higher side, which is actually not needed. But
Hmm.
see, as an example, this is a trade in March month. Dealers are always thinking like that their volume is going to hit into the loyalty program. The 31st March is there. Then also this year the price rise and the uncertain of deity of the market, so they want to procure the materials. So these are the stage where they invest more and they give the more orders, more volume. Uh, so that times because of this more inventory that goes to the more days actually to the companies. But I think
Okay.
it is covered into the within 15 or 20 days or 1 month after that. So it is manageable.
15, 20, 1 month after the sales are done, I believe.
Not sales are done, but if the condition, example, if the condition is the 90 days into the
Hmm.
regular conditions, so
Hmm.
sometimes because of this situation, it goes to the 1 month more, and the retailer ask at least 20 days or 30 days more rather than these 90 days.
Hmm.
But it is manageable then after 1 month or at least more 1.5 months. Beyond that, that is not needed actually.
Got it. And what is generally the retailer margin? I know it will depend on territory to territory, but still, broad number, broad sense of
Yeah, so it
margin.
is 7 to 13% we are passing.
7 to 13% margins. Got it.
Yes.
Utkarsh bhai, my next question is about how do you identify the territories or states where you want to expand, right? You're in an expansion phase, so what all things or what all parameters went into deciding where to expand geographically?
So it's of course the number of the populations where the more infrastructure real estate is growing, and now see as a India story now tier two tier threes are the more focused territories.
Hmm.
So if we talk about the Bihar, if we talk about the Jharkhand, the UP,
Hmm.
these are the states where the growth is coming from. I believe all the territories. If we talk about the Mumbai, if we talk about the Ahmedabad, if we talk about the Rajkot, Surat, these almost developments are going into these bigger cities. So, except the tourist place, if we talk about the Jammu, Kashmir, or Goa, I think, or Assam side, I think remaining all states are growing. So, what 15 states we have entered, that all are the going well growing states actually.
Got it. Got it. Got it. And any commentary on competition, Jeevan Jod, Bondtite, etc. Like, how are they doing versus you? Like, how do you look at competition in general when you're thinking about a new geography, right? So some flavor on that would be very useful.
I believe it is going very nicer way. I believe it is not any wrong decisions for any companies. I believe because as we say that the market leaders has taken the step to increase the price also, and they have maintained their EBITDA also. So I think there is not much kind of any war or anything going happen. I think what the distributions, what the efforts, whoever do the for the long term policy strategies, they will make their market share, and it's a very positive sign for us also. Last 3 4 years maybe the competition going aggressive, but though we are able to maintain this growth, so that is a very positive sign for.
Yes, that is. No, congratulations on that, sir. I'll
Thank,
go back to the queue. I'll leave the queue. Thank you very much, Utkarsh bhai. Thank you very much.
thank you.
Thank you, sir. We'll take the next question from Saket Saravi. Saket, you can go ahead, please.
So my question was in continuation, like sir, like Samit sir was talking about the the upfront investments we have done, like in the brand promotion, like and this the dealer meets and all, and we see the benefits coming in future. So for last, if we see sir, for last 6 7 years of our company, from COVID till 2023, there was exponential growth in our sales. And after that, for 3 years, virtually there was no growth, in spite of our company pushing up for these dealer meets and everything. So now that suppose again we are pushing aggressively for dealer meets and all. So what is the difference that we see today and in last 3 years, that in spite of all the efforts, there was no sales growth, virtually hardly any sales growth. And now again we are putting so much effort for dealer meet and all in anticipation that it will bear fruits in future. So what is the reason for, like, for the last 3 years there was no growth, and now again we see that the growth could come going forward?
See, actually, if you see about that, only 1 year was that where we consolidate the 23 24, where we were same revenue 258 260 crore rupees. But after that, we have taken 285, and then we have 314. And right now, if we consider the quarter 1 phase, it is about 360 crore around. So we have taken almost 9 to 10% of growth. But yes, you are very right that about what we were expected about the 15 20% growth in 23 24, we were not able to achieve that much. But I think that was the consolidation we needed at that time, and what changes or what we improvement we have done into the organization, that is a very drastically change. Uh, See if in a team wise, in a channel partners, the corrections, the improvements, the market expansions, the branding, the activities, we onboarded the Mr. Pankaj Tripathi also. We are the first adhesives brand who have taken the this type of brand ambassador also. So these all our activities are ongoing. And Samit bhai, you can guide more for this question actually.
Sure. So, Takeji, as I mentioned earlier also, that we are into completely 2.0, that is transformation journey basically. So what happened that we studied the last 4 5 years, as you rightly said, that there was some marginal growth on certain years, and as MD sir also rightly mentioned, that we consolidated for a few years and all. So now here on the journey is to the next level, and hence as I told earlier also in this call only, that we are getting future ready. And for that, we are laying strong foundations across all departments, be it tech, be it HR, be it SOPs, policies, admin, marketing, sales, geographical expansion, plant capacity expansion, storage capacity expansion. So everywhere we are like, we are getting future ready and investing for the coming phase of the company. So you might see that. Quarter 4 onwards, there is despite there is, I mean, competition is always there, but despite any odd or anything, also we have grown. We are also growing geographically. We are adding new talent to our portfolio, and going for a complete transformation journey from here on. So that is what we have been driving so far.
Last year, quarter 2 and quarter 4 was also about the double-digit growth.
Yeah.
Quarter 2 was 16%, quarter 4 was 20%. Now
So
this
about
quarter,
15 to 20% is what we have been driving. And I think that is what we are hoping that with the kind of transformation journey we have been working on. So we are confident that we can achieve the desired numbers in coming few quarters and couple of years, is what MD sir also mentioned. So we are right now laying down a strong foundation for a robust growth in coming quarters and years, basically.
Sir, if you don't mind asking me, like suppose like from March 20 to 23, we had almost tripled our sales, more than that, 3.5 times the sales, right? And after that, in last 3 years, it's only 20% increase from 260 to 315. So like what had happened, what had gone wrong that this kind of growth we had earlier, this 50-60% growth, and after that only 5-6% CAGR growth. What went wrong all of a sudden? Like, I wanted to know if you could give some light on that.
I think nothing was gone wrong actually. But as I mentioned that the consolidation was needed because see size was also different. In 2020 we were doing 100 crores of revenue. Then we take a jump of to 181 crore rupees. So that was a 80% growth. That was a very exceptional growth what we have done. And that was the reason that we expanded into the newer territories and we went aggressive and what 15 years we have invested, we leverage them, we capitalize them, that so it is a different number right now. At that time, when we do 100 crores of revenue, the outstanding, the receivable were around 30-40 crore rupees. Right now the receivables are of 150 crore rupees. The revenue went to the 314 crore rupees. So it's a different game now. And the competitions are there, the different companies looking for to enter these categories, as you aware about that. So though because of these parameters also we have come out from these all the situations. And last year, as I mentioned that if we see about the last 4 quarters, so 2 quarters were there where we grew up by above 15%.
Yeah.
Quarter 4 was 20%. So that is the sign we are doing something into the right directions. We are able to maintain our company debt free. We are sitting on the 160 crore of cash for the future expansions, for future growth. The brownfield is done. The asset light model, 7 crore rupees we have invested into the brownfield, and now the company is ready for the generating 650 crore rupees of revenue. So these are the very positive sign, but we need to understand this model is the distribution and network model.
And
And
it's an execution heavy model, actually. Yeah.
education
So
heavy model. And see the leader has invested 65 years into their journey. So it's a very long journey what they have invested, and we are still 20 years what we have invested. So we are expecting next 10 years we are expecting very much growth, what foundations we have built and what investment we have done into our journey. So we hope so that you understand about this distribution network.
Thank you so much.
Thank you.
Uh, Sir, we'll take the next question from Arjun. Arjun, you can go.
Yeah, hi. Firstly, I really want to say that it's very commendable what your team has done with uh, the benefit plan that you have and just holding that interest-free money on our books. I think it's something that a lot of businesses can do. So, very, very commendable. But secondly, my question is regarding working capital. I think one of the earlier participants also asked. Um, so that is I feel like one of the key concerns where in this quarter I think the inventories also went up, which you said was the reason you wanted to stockpile. But the receivables, how long do you think before they come down to a more comfortable level? That is what I wanted to ask.
Yeah. So we are aiming for the next 2 quarters, and we have uh, more focused now for these investments. How can we are also looking for the channel financing things also. And see, you are very right that that should be concerned, and we are also concerned about that. But we have breathed this business from so many years. 20 years already we have invested, and as we see that bad debts not going for above 1%, above 0.5% actually. So we have maintained that. We have maintained and generated this PAT also last 3-4 years. So that is doable. not giving any excuse. It is not correct. Of course, we should go down about that, and we are trying our best to. But we don't want to lose any trust of our retailers or of our new markets. So we are going little slow and monitoring the things and maintaining the relationship, and we are explaining, and we are giving the more training to our sales executives to maintain the relationship also without spoiling the relation, to maintain the data days also. So we are into that journey, but it is not, I think, a correct step will be there if we go for the sudden and immediate basis for this. So I think we require 2 to 3 quarters to maintain and to get down these data cycles. So this is how we are doing.
But just hypothetically, by the end of, let's say, this year or next year, do you see the debtor days coming down to something like 120, or would it still be higher, or would it be lower,
Yeah.
possibly?
See, we are aiming for at least 120 days. That should be the cycle, as we are to the direct retailers, not above that. But as I mentioned that for the newer markets, see, we have started for the Jharkhand, North India. We have started for the Patiala, Chandigarh, Haryana,
Mhm.
Hisar. In a UP, we are focusing now 8 cities. We are penetrating more than 1,500 counters placements are done into the UP. So see,
Mhm.
these are the placements and new sales generating to the dealer. So it is not the right time that we can push about the immediate payments or very rigid into the payment terms. So
Mhm.
we are going little slower, and we are maintaining the good long term relationship with them to penetrate more. But yes, we can aim for the next 2 3 quarters to maintain this 120 days of data cycles.
Okay, and so just one last question. Do you have any example of any state where debtor days, when we initially entered, debtor days were around 150, and we have successfully brought them down over time?
Actually, all the states.
Okay.
All the states, because if we talk about the Gujarat, if we talk about the Rajasthan, MP, Maharashtra, see, earlier 2 3 years is always painful for any company
Hmm.
regarding the EBITDA front, regarding the data cycles. Because see, you are new for the UP. Example, if
Hmm.
we are going the UP, nobody knows about the Europe, though we are a very established brand into the Gujarat, but we have invested more than 18 years into the Gujarat to set this market.
Hmm.
So, UP, we need to set this the team, the network, the distribution network, the relationship with the dealer. So these are taking the times, and the beauty of this business is what investment is done. That is for the longer years. So that is the moat. What can give us the motivation to do these investments? Actually, it's a B2C B2B model. So it's a patience is the, I think, key factors to for the growth journey for the longer years.
Understood. All right. Thank you, and all the
Sir,
best.
Thank you.
thank you. Sir, since there are no further questions, sir, would you like to give any closing comment?
So yes, thank you very much for trusting us, and we are trying our hard, and we are optimistic about the India growth story, India market. What we have invested into the newer markets and existing markets, so we are hoping best that we'll able to generate the growth story for the coming years. So we needed your support, your guidance, your feedback. So thank you very much for trusting us, and. Yeah, thank you very much.
Yeah. Thank you. Thank you to the management team for your valuable time, and thank you to all the participants for joining on the call. This brings us to the end of today's conference call. You all may disconnect now. Thank you.
Thank you.